Well, everybody, take your fingers off the trading button. You won't be trading or selling on this one. This is the boring Janet Yellen. Her speech largely a recitation of the history of the financial crisis and regulatory failures and how things have improved since then. She praises the swift U.S. regulatory response to the Great Recession, particularly changes in liquidity and capital requirements that have made banks safer, she says. Quote, the evidence shows that reforms since the crisis have made the financial system substantially safer. And she says that's reflected in the credit default swap pricing and equity values that now match book values for banks. So investors see the same sort of progress that the Fed sees. There is a bit of a Jamie Dimon section in this, I would put it that way, because she sort of pushes back against the idea that regulation has put a cap on lending in the U.S. She says that there is a bit of an effect on less credit-worthy borrowers, but that research confirms, quote, sizable net benefits to economic growth from higher capital standards. She also pushes back on some complaints from Wall Street that there are significant liquidity issues in the markets. While dealers have cut back on inventory, she says, the market liquidity for corporate bonds remains robust overall. She does admit there is some room for improvement in the Volcker rule and that other tweaks could be made to Dodd-Frank legislation. But in general, this is a speech about Federal Reserve and government success in regulating the financial system since the crisis, and not at all one about the economy. There's only one line that obliquely refers to it, and she says that there has been substantial progress made toward the Federal Reserve's economic objectives of maximum employment and price stability. But as far as anything controversial, that's it, Vonnie. There's not a lot for investors to move on here.
Exactly. And Michael, how much impact can she have on changes to financial regulation? She can put her opinion out there, but ultimately that's not really her mandate to be concerned about, right?
Right. Much of what you would do would be handled through the legislative process. And of course, people in Washington say that's going to be very difficult to accomplish. However, she does talk about Federal Reserve bank regulation and how they have tried to make things a little bit easier, particularly for smaller banks. And they have tried to modify the stress tests to make them a little bit easier to take into account some of the bank's concerns. And the Fed, she says, is very sensitive to the effect of regulation on banks, the costs they impose, particularly for smaller banks. But in general, she says the regulatory regime the U.S. has benefited the economy overall rather than harmed it.